Welcome to another video from Creativo Solutions. You're actually watching the podcast series. We provide you with live content recorded from live classes. I hope this content will help you learn something that will add value. Post any comments or questions below and consider subscribing to the channel. You can visit the website for more information to help you. The audio here will cover a bank reconciliation and it will summarize the main process in order to complete a bank reconciliation question.
So the bank reconciliation is just a process of checking. That's all it is. If you want to summarize it, you've got internal records, the bank has external records, and as a business, you need to confirm what we have in our books are in line or accurate with the bank statement. The bank statement we get how often? Once a month. So every month you'll get a bank statement for the month for that particular business's account, and the business would then have to perform a reconciliation because the business needs to keep track of all its cash, because cash is what makes the business succeed or go bankrupt. If we don't manage our cash correctly, then we have problems with cash flow, and then the business can lead to bankruptcy if they use too much credit. So the first step in a bank reconciliation process is just to confirm what the bank balance is in the bank statement, because can you change that? No. So am I going to look at the beginning or end balance? Why the end? You're looking at what happened during the month. So the bank balance at the beginning of the month doesn't show any transaction during the month. The bank balance at the end of the month shows you an amount that reflects all the transactions during the month. Does that make sense? So when focusing on a bank reconciliation, you're starting there, and then step 2 is to check the bank statement with what? Yes, your records, your books, your accounting records. Okay, so confirming or checking the bank statements with internal or, we can write internal records. And the internal records for the business would be the general ledger and the journals. So the general ledger will have a T account for bank, and the journals will be all the separate transactions. What's step number 3? Correct. Okay, so you need to identify the correct accounting treatment of it could be a transaction that's arose during the business's operations. Okay, so what transactions do we have in the business, and do those transactions affect either us as the business or the bank as the external party? If it affects the bank, are we going to adjust or reconcile? If it affects the bank, as in the external party, adjust or reconcile? Reconcile. Can you change the bank's records? No, you can't. Okay, what you've been given is the bank's record of what they think you have in your bank account. You can't change anything on that bank statement. But it doesn't matter where we are in terms of country. Countries have banks and businesses have bank accounts. So businesses and banks have to confirm that their records are aligned. Okay, meaning what I've got and what they've got, we're all on the same page. Okay, so that's reconciliation basically. Reconciliation just means to reconcile, meaning we're all on the same page. Okay, we understand, we see eye to eye, etc. Okay, so when performing a bank reconciliation, we're checking what we have and what they have, 100% correct. Okay, to make sure everything is correct and in line with what we've got in our records, because the bank will record what they think we have in their records. Okay, all the transactions that took place.
Can I also use the word verify?
Verify is fine, yes, because you're going to have to check who's correct. So you're verifying if I'm correct in terms of the business, or is the bank correct? If I'm correct, then I don't adjust, I reconcile. If I'm incorrect, then I adjust. Last step, just to reconcile. Do you do both?
One.
No, it's one or the other. And that's what we're trying to identify in this particular question. Okay, so we're looking at a scenario where you've been given different transactions or potential transactions that could arise in a bank reconciliation question, and they're asking you, do you understand what that means for you as the business and the bank as the external party? Okay, that's what we're trying to establish. Does that make sense? Okay, so that's the process. The process doesn't change. Adjust is fix your internal records, meaning process an adjustment to make your books balance, okay, in terms of your books and their books being the same. Reconcile meaning we need to report something to the bank so the bank can fix their records, so they're in line with what we've got.
And that ends the recorded audio for this video. Thank you for listening. Consider subscribing to the channel and like the video if you felt that this helped you, and we'll keep creating more to help you.